Good day, traders. Well, we had a big sell-off to the open of the year. Yeah, for the NASDAQ, and big sell-off. So this is the 5-minute 5-minute NASDAQ. So we had a trade up here. From there to there, and there to way over there. Still positive, negative, positive. So it was still a valid trade setup, and you would have got short right on the opening of this candle. Stop would have been 46 ticks, and it went down 100. And then we had our, higher close down it goes trades. We'll put them on there too, right there. There she be. And then we'll look on the 1 minute. See how it lines up with those retracements, eh? That's funny. So anyway, if we just make it smaller here, one size. Sorry about that. I don't know what it is, getting old. All of a sudden my throat just dries up. Jesus, I hate when that happens. Okay, let's go back to a bigger size. We'll take the auto scroll off. And I'll show you the trade from up here. This is the 1 minute, okay? This was the other one from the hill up. This one on the 5 minute, that worked out. And I want to show you something else here. So here we would have took it from here, right through them candles to this one. And this one down to this one like that. So there's the divergence. There's the arrow already from the 5 minute. You would have got in just like one candle sooner right here. And it was good to go down. 129 points, ticks, whatever you want to call them. We had one higher close, sell it, down it goes. And we had another one for here. Actually, no, it was right here. We had the higher close right here. It was close to the 5. You would have sold it, and it would have went down. You could have done a little scalp there, not by much, maybe 10 ticks. If that's how you trade, little scalps, If not, you would have waited it out and it would have went back up, and no reason to freak out. You know why no reason to freak out? Because it went back up here? Because the 5's still below the 7. That's right. That's what keeps you in the trade. That's what keeps you to stay short. Is even though it went back up again, you went back to break even, or it even went against you a little bit right in here, these two little wicks. There was no reason to panic, because the 5's still below the 7, and this is just, a little sideways action, and and how much more did it go down? Well, it went in the next 2 minutes. Well, it went down 31 ticks. Then there was one more right here if you really wanted to find this. Say, oh, this is what I'm trading today right here. So you see this first candle would not qualify because it's far away from the 5. But this one here. But this next one that closed up just above the 5, That was your higher close. Open of the on the close, sell it, and down it goes. Another 31 ticks or points or whatever they're supposed to be called. And then this is on the 5-minute where we had those higher close, sell it, down it goes. Higher close, sell it, down it goes. Doesn't look like that here because it was on the higher time frame. But you see how they all lined up on the 1-minute and the 5-minute, right? See? Right here, see? Higher close, sell it, down it goes. Higher close, sell it, down it goes. You see how those worked out. But also on the 1-minute, okay, I want to show you that, this right here. Holy jeez, my freaking throat's still dried out. So right there is a hook down, okay? Right there. So they got the people buy-in, buy fake, and then they smack it down, which I now call it a hook down. And you would have got short right in there, and down it goes. 40 points or so. 44 points to be exact. So there's how many successful trades. Here's the divergence, 1. Here's the higher close, 2, 3, 4, 5, 6, 7 of them. Pretty good, pretty good. There's even divergence on the 1-minute here, from here to here, and from here to here. So I know a lot of you probably go, oh yeah, he just goes to this chart and looks for it and points it out, or he goes to the next chart, higher time frame, looks at it and points it out. Well, if you were in front of the screen, okay, when you're on, say, the 1-minute, oh, that went back there again, okay, you're looking for the trade setup. You see it, you do it if you feel comfortable about doing it. If not, you don't do it, okay? So, but you always need to, there's something you need to train yourself with, and that is, whether you're trading the 1 or the 5 or the 15, okay, you need to go to the next higher time frame, see? And it would have showed you everything would have been in line to do these sell trades, okay? You can see them. But if you always trade the 1-minute, let's say, okay, then you always gotta, flick back to your 1-minute time frame and look and wait for your trade. But it only takes 2 seconds to go click, and there, you're on the 5-minute now, see? Always flicking from 1 to 5, so you can see where the setups are. And that's how you see them in advance. Well, I teach you in the course how to see it in advance, but anyway, nothing's any good to you if by the time you see the signal, it's like the train has left like 20 miles ago. You know what I'm saying? 20 pips ago. That's not good to you. You need to know, like, you need to be like, say the price was coming back up here. You need to know way down here, okay, what's going to happen next. Is it going to be a low and a lower low? See, divergence to buy it. There was a trade there too, actually. But I wouldn't have taken this trade because it would be trading against the higher time frames and the whole day. The whole day it's been down, 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 down. Still going down, see? That's why you got to be in control of your time frames. You gotta go and flick through them. You don't have to. We don't have to do like like what do they call it? Top down analysis from the daily charts or anything. We don't need to do that. We're trading a 1-minute and a 5-minute chart here. But if you were trading like 1 hour and 4 hour, then yeah, you'd need to go look at the daily and see what's going on to do the trades. But I don't trade those higher time frames, so it's useless to me. It's pointless to you too to go and do your top down analysis far, far way out, daily, it's just a waste of time, in my opinion. But anyway, as you can see, we had beautiful trades here. Everything lined up to do it too. Okay, so let's move on now to the S and the P. So in the S and the P, we have it on the 1 minute. Now look, if we would quickly look at the 5 minute, see it's just chopping up and down. You wouldn't want to do any trades in the 5 minute today on there. That's how you check too what you want to trade. If you're just looking for a few ticks, few points, well then you'd look on the 1 minute, right? So anyway, 8 o'clock we opened here. It's actually a trade there if you wanted to, like trade it right there. And this came like up here kind of thing to here. So you would have got in right there. So say you would have got in there. Now your stop would be right there. Guess what? It came and got your stop. Or if it didn't get it, it gave it a kiss anyway, and then took off. So it looks like it would have hit your stop right here. Anyway, so there's a loser. What do you know? We can't always have all winners. So anyway, then we went over here, low and lower low. Okay. I don't call any divergence in there, but we definitely do up here. Okay. So we got our high and higher high. And right here goes down. Okay. That's divergence. Which would have got you in right there. 4-point stop. This is the S and the P. And it went down almost 12 points. And then we had a double bottom right there. Or you could even draw it from here down to here, see? Well, it's still a double bottom right there. See, right there, you would have got in right there. Long right there. Went up basically 10 points. So over here, I don't know if I have drawn these in before, but it can be tricky. No, there wouldn't be divergence there. There's no divergence there. But there is here, if you really want to look for it, and if you really want to see, just make it bigger, see? Just like that. Make your chart one size bigger, and you can see the trade. Get in long right there. If you didn't want to get up after it rallied up like 4 points, then you wait for the first lower close, buy the 5, buy it, up it goes. So if you would have bought it right there, it went up 5 points, and the stop would be for the divergence 2.5 points. So you would have got definitely your 1-to-1 in here. Okay? All right. That's the S and that's the P. And now we're looking at the Dow. Okay, double bottom. This is 5-minute time frame. And you would have got long right in there. Stop would have been 44 points and went up 126 points. But what was this, news or something? No, it was just the open. So this entry would have been like 15 minutes before it opened up. And what do we have right here? What do we have, ladies and gentlemen? We have a lower close Buy it, up it goes. Went up 102 points there. Here's another one, look. So used to putting on the sell, thumbs up. Lower close, right near the 5, see? Buy it, up it goes. Went up 80 points. Okay, now let's look at the pound dollar. Oh, just one continuous trend down. Look at that. See, I knew there would be something on the 15-minute because there was such a long trend. And was I right in my mind before I flicked to this chart? Yeah. And I never looked at it before that. I only looked at it for the first time just now. That's why you always got to flick through the 1, the 5, and the 15, like, often if you can't find a setup, okay? Yeah, so this one, you just put it like that, see? You can always adjust it a little bit as long as it's higher than here, as long as this point of where we drew it to is higher than this point. It's divergence, man. See it? Oh, yeah. You see it. You know it. You love it. You like it. I like it. Do you like it? Oh, yeah, I like it. I like it. Mikey likes it. I bet you nobody knows what the hell I'm talking about unless you're around my age. This commercial on TV, it was a hit. I forget what he was eating, but it's like cereal or something. Mikey like it? Yeah, Mikey likes it. And they show this little kid eating, I don't know, cereal or a cookie or I can't remember what it was. Oh, the crazy things that come in my mind. I'm sorry. Okay. I would have sold it there and it went down 130 pips, man, to the bottom. Do we have any higher close? Sell it. Down it goes. No. See this one? Doesn't qualify because it's not close to the 5. This one also, same thing. This one, no. This one, no. Oh, look, down here we finally get one. Do you really want to sell it down there? I know I wouldn't. Okay. And the 5 minutes, yeah, let me show you the one on the 5 minutes. So it's right here. Hard to see divergence is what I call it, but its known name is hidden divergence. Yes, indeed. So you would have got short right there. Like 10 pips from the low of the day. Would have you done it? I don't know. See, it's like a 15 pip stop. Did we get 15 pips? Oh, look, 14, 15. Missed it by one flippin' pip, ladies and gents. Okay, let's look at the euro. It's probably the same kind of thing. See, it's very choppy. You probably would have been better off to go to the 1 minute. See on here, because there was no trades really. Yeah, here's the divergence here to buy it. Didn't go very far. How far did it go? 6 pips. See? You gotta look at that too. It's not, if you would have done that trade and made like 5 pips, you'd say, oh, I don't know if I want to do this here anymore. Here's a double top. Went down 13 pips before it bounced back up again. Here's one here. 15 pips. Yeah, not too good. I would just, I don't know. I'll mark this one in. It's right here. If you're into scalping the euro, got zero spreads on the euro. But they got the commission there. Went up 16 pips. Stop was 3 pips. Okay, that's enough of that. And the 5-minute, not very good. Like, it came down so far, I would not want to sell after it came down 80 pips. You want to sell down there, like the range, daily, what do they call it? Daily range, DR, whatever. It's long gone, man. It's, you know, if you ever look at a chart and it's like, it's already dropped or went up like 100 freaking ticks or points or pips, it's probably best to leave it alone and look for something better. Okay, let's look at the pound yen. And it had the hard to see divergence trade from up here. You see this big mountain here? Looks like an upside down teacup. Yeah. See, so in this retracement, you know, it just screams at you. It's when it's showing something big like this, it's screaming at you to sell it. So you would have got short right in there. And it went down 98 pips on the pound yen. And what do we have here? Oh, something good. We have a hook down trade. Yes, indeed, we do. Buy fake for some people and a winner for some others with a hook down. And it went down 63 pips to the bottom. Gotta love it. And here, of course, is a higher close. Sell it, down it goes. Okay. Where did I just see that? Oh, right there. And that was a winner also. It went down 18 pips. And down here, see the low and the lower lows? It's not divergent because this low is lower than over here. There's no trade. There's no trade there to buy it. Let's take a look at the euro yen. It's probably the same kind of thing. There's the same hook down right there. It was at the exact same time, I bet you. Let's see. 9 o'clock, that one happened. And on the euro yen, yeah, 9 o'clock. Exact same time. Isn't that crazy? Yeah, because they're run from algorithms, from the elites. This is their game. And they don't want you to win. Shh, shh. We can beat them. We can beat them. Hello. My name is Kane. I can help you. Yeah. Kung Fu. Kung Fu, man. Okay. Let's try and find a trade here. Oh, it's right here. It's right here in front of my freaking big fat eyeballs. Right here. Put it here. Same thing. Big mountaintop, Mount Everest, to the little foothill down here. Screaming at you to sell it when everything lines up. Like closing down at the below of the candle, the 5 crossing down and closing below the 7. That's an entry point right there, saying, let's sell this sucker right there. And sure enough, our stop would have been 25 pips. There's 15 pips. Would have went up. If you would have held on, went down 60 pips. Okay? And what do we have right here? Oh my goodness, what do we have? We have what I just showed you on the other pair. A hook down. Another hook down. Oh my goodness. 45 pips. It went down. And we had divergence right here. Low and lower low. And this one goes up. Wasn't really showing good confirmation here. But anyway, so if you would have got in right there, guess what happened? It only went up 10 pips. And your stop was 31 pips. So the stop is down here. Oh, by the way, did I tell you I'm not a financial guru advisor guy? No, I'm not one of those guys. I'm just some guy from Canada. Looks at a few different setups. That's it. I don't give out any advice here to trade. I don't tell you to buy or sell, nothing. All right, let's move on now to gold. This technically is another one right here. Let me just show you before I leave this chart. Right there. But at that point in time after it closed right here, would you want to sell right here at the low of the day? I sure as hell wouldn't. No. But if you did, you had the opportunity to make up to 18 pips potential. Doesn't mean you would have got 18 pips, but that would have been the full potential of that trade, which I would have not have done because it was at the low of the day, the entry point. Yeah. Okay, gold. We have hidden divergence right here. Boy, that's right in the middle of that sucker. And right there. Went down 30 points. We would have got it. It was 23. Well, 31.6. It went down 31.2. Yeah, whatever. Missed it by like 0.8 of a, I don't know. No, it's different. It's ticks. I don't know. It would have missed it anyway by 1 tick or pip or whatever. And then we have, let's just swing it over like this. We have a double top right there. Gotta draw a new one. Like that. You would have sold it here. Stop would have been up here, 33 points. Went down 114. And now it's rallying right the mother fook up your nose. Okay, let's look at the last market of the day, and that would be oil. Crude oil. Rude crude. Okay, where's the freaking trade, eh? I don't see it. Because this is higher than this. And this needs to be lower than this side. Yeah, so there's no trade here. There's no divergence, ladies and gentlemen. No divergence. And this one is not a higher close, sell it down, it goes, because it was at the time it was too far from the 5. Okay, and then it came down, came down, came down. And the first one is way down here, and I wouldn't have taken it. Higher close, sell it, up it goes. See, it would have went bad on you. Never would have been good to you. I wouldn't have done this because we already made the move, man. The move was to sell it here. It already came down over $2 a barrel. This is why I would not sell it down here. It's past its daily range. Okay? Yeah. So I wouldn't do this trade either. It is divergent. Let me show you. Like this, like this. And then, oh, look at it crap down, eh? Just as I said I wouldn't do it, look at it's winning. Oh, Mozi. Okay, there's something I wanted to share with you now for a few weeks, but I kept on forgetting to tell what I want to say. So, um, I don't know if you come across the same situation. You probably have. You know, you're sitting there. You know, say you start at 8:30. Say you start trading, start looking for a setup, right? So you're sitting there and you got your Java with you or whatever, or your Wheaties or whatever, and you're watching the screen. Next thing you know, an hour has passed and you're still sitting in the chair, giving your back pain. Well, not always everybody's going to be in pain, but some people will. And your body's getting all stiff and it needs to move. It needs to move. So, I fall in this same scenario. I'll sit here for an hour and a half, 2 hours, and not move and not get up when I should be getting up. So now I bought a tick down counter. So I have it set for every 20 minutes. Okay? So after 20, I set it, 20 minutes goes by, it starts beeping. Unless I'm in a trade. If I'm not in a trade, I just get up. Or if one's just about to set up, I don't get up. But say there's nothing happening right at this moment, I get up, I walk around, do a couple, punches out or whatever, move the body, right? Move your arms, you know, maybe like do a couple like lifting your leg ups or whatever they're called, unkink, not kink, but unseize yourself. This is what you need to do. It's very important. Especially if you have back problems or whatever, you need to get up and walk around. You don't have to do it for long, just a few minutes. Go and move your body, boom. Go back, sit down, set the timer again, and in another 20 minutes, do it again, and do it again. And another thing that you should be doing is to try and keep your discipline up. Is after you finish trading, whether if it's lunchtime, whatever, so eat your lunch, whatever, then go for a walk. Trust me. Going for a walk releases the discs in your back. Okay? And it's just good for you. It's good for your back. It's good for your legs, your arms. If you swing your arms when you're walking, you know? Or if you work out at the gym, go to the gym. But the most important thing of what I'm trying to say to you right here and right now, ladies and gentlemen, make it a habit. Do it every day. I'm about to go for a walk here because I'm almost done here. Okay? So to keep your discipline up, go for that walk. Go to the gym every day, from Monday to Friday. Saturday, do whatever you want. Sunday, do whatever you want, of course. But to keep your discipline up, don't miss a day to go for a walk unless you're sick, of course. Go every day during the week. It will keep your discipline up. If you stop, you will come to if you listen to what I say and you do what I'm saying, you will come to a point. It might be after 5 days, 10 days, 2 weeks trying it, maybe a month doing it. If you can go that long, you know, you're gonna cut. A day's gonna come and you're gonna go I don't feel like going for a walk today. I'm not going to go today. I'm just going to take a day off. Don't do it. Keep up the discipline. Keep going for the walk every day, Monday to Friday. Okay? Now, I to keep the discipline, I've seen this guy. He's a little crazy, okay? You may know him. Patrick Wheeland. he, you know how he keeps his discipline going? He jumps in a fucking deep freezer that he filled up with water and it's like ice cold and he goes in there for, I don't know, 5 minutes or something. That would kill me. If I jumped into a fucking ice pool of water, man, I'd have a stroke and die. Well, because I've already had 3 strokes. So wouldn't it be advisable for me to do that? So I just go for a walk, Go for a walk around the block for like and how long you go for a walk is important as well. You need to do at least 20 to 25 minutes, nothing less than 20 minutes, okay? Do it every day. Keep up your discipline so that when you can come to the charts, you can say, okay, yeah, that's not a setup. I'm not doing that one. It's not a setup. I got to wait. I got to wait for the next one. It will help your uh, discipline and your patience. You need patience and discipline to trade this market successfully. It's not just the strategy that's going to win for you. You have to have the mental mindset, which I'm telling you right now. While you're trading, get yourself a timer, put it to whatever, 20, 30 minutes. And every 20, 30 minutes, get up, go for a walk, do some stretching. For just a couple of minutes, then come back and sit down and continue to look for the next trade. But after you're finished trading, I know I'm repeating myself. Go for a 20-minute walk. If you can do more, even better. 30-minute, 1 hour, whatever. Trust me, your spine you'll feel so much better by doing this. And how do I know this? Because I used to work in factories before, okay? So I worked in this one factory. It was called Custom Trim. I used to cut the leather for the leather wrapped steering wheels and the leather wrapped gear shifters. Anyway, when I worked there, every day before we started to work, we would do exercises, stretches, putting your arms up above your head and, going from side to side, you know, taking your neck and going around in circles, all that kind of stuff. And at first, nobody wanted to do it. And they were laughing at it and they're going, this is stupid, blah, blah, blah. And they're just saying, come on, do it, do it. And I didn't want to do it either. And then I started doing it. Oh my God, the night and day difference. How much better I could do my job because I loosened up all my muscles. They weren't seized, okay? They were movable, bendable. I could do my job so much easier because I had to lift these metal dies, D-I-E-S, put them on top of the leather, and then it would come down and it would cut out that piece of leather, whether it was for a steering wheel or gear shifter. But anyway, if you do that, ladies and gentlemen, you're going to notice a huge difference in your trading. But in order to stay disciplined, you got to keep doing it, okay? So anyway, I want to thank you for watching, and I want to thank you for listening. I hope you're having a happy new year so far. So we'll see you tomorrow. Will you do it? Will you go for a walk? Will you do it? Good luck. Good trading.